So after we get computer equipment done, we have the contra asset account, accumulated depreciation for computer equipment, that's credit of 500. And then we go to salaries payable, credit 420. Let me grab a ruler, it'll be faster to find this stuff. Okay, 420. This is something that should be in the arsenal of every accountant, a ruler, absolute necessity. So if you don't have a ruler, just take paper and just fold it in half or in quarters and use that as a ruler. Cheapest way to get one. Capital account, credit 50,000. The withdrawal account, debit 1,500. Commissions earned is a credit of 9,750. Depreciation expense, debit 500. Salaries expense, debit 3,620. Insurance expense 133. Next is rent expense 1,800. Office supplies expense 400. All these are debit, by the way. Repairs expense, debit 350. Telephone expense, last one, debit 750. Okay. And I mentioned to say that when you do your adjusting entries and you do your adjusted trial balance, you got to do your totals at the bottom, make sure you got everything. So let's go ahead and do that real quick. So 1,750 plus 500 plus 420 plus 133 plus 400 equals 3,203. Over here, 400 plus 133 plus 500 plus 420 plus 1,750, 3,203. So that balances. Then we go over to the adjusted trial balance here. 27,000 plus 1,750 plus 600 plus 2,267 plus 20,000 plus 1,500 plus 500 plus 3,620 plus 133 plus 1,800 plus 400 plus 350 plus 750, and I get 60,670. Over here I have 500 plus 420 plus 50,000 plus 9,750. And I get 60,670, same dollar amount. Phew. That's nice to know that I came out balancing. So my debit and credit columns are the same all the way across. I got debit and credit columns equaling each other. Now, I always get the question, why don't I just take these two totals plus these two totals and then get this? Well, look at it this way. We take 58,000 and we'll add 3203 and I get 61,203, so that's nowhere near what this number should be. Okay, you see it right here on the calculator, 61,203 compared to 60,670. So you can't just take this plus this and equal that. And that's because of the debit credit thing, because there are things that are credit balances and there are things that are debit balances, so you can't mix it up like that. Okay. Okay, awesome. I think we've gotten as far as we need to go at this point. Let's see what else we have. Prepare the adjusted trial balance as of April 30. Yep, we did that. Next, what do we have to do? Prepare income statement, statement of owner's equity, and a balance sheet for 2015. Okay, I'm going to jump to what the solutions page has. And I have magically an income statement, a statement of owner's equity, and a balance sheet. I want to show you how the numbers come from my adjusted trial balance that feed into each of these statements. So let's start from the very beginning here. If you were to look at, if you were to look at from commissions earned and then all the expenses that fall underneath that, all the numbers here, 9750, 532, blah, 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 all this stuff is right here in your income statement. If you don't believe me, put this camera on, put this video on pause and see for yourself. 9750 is your revenue right here, and all these expenses listed, all these expenses are listed right here. Okay? And then you total up your expenses, 7,553. So now total revenue minus total expense equals net income, 2,197. We come down here to the capital statement of owner's equity. We had capital as of April 1st of 0. Why? Because we just started the business. Okay, so the capital is going to wind up in 0 for the beginning of the company. Owner investments, the owner put in $50,000, and so that's this $50,000 that we see right here. Net income is added to that, 2,197. Where did we get that from? Right up here. That's our net income right here at the very top. That comes down and fits into net income down here. Total them up. Subtract out withdrawals. That withdrawal is right here, 1,500. Now a lot of people always ask me, do you have to do debit credit format for these kinds of things? And I say no, because this is a report format right here. This is report format, this is debit credit format. This is report format, this is debit credit format. You do not do debit credit format here. Even though this happens to be on the right side and this happens to be on the left side, that's just a happenstance. It just happened to work out that way. But if I had several revenue items, I'd have them listed over here on the left side, and then I'd put the total over here. And I have several expenses, I list them here, but I put the total over here. So you can see it does not observe debit credit format, it's just a report format. That's all it is, just a report format. Nothing more, nothing less. Okay? So now that I have a ending balance to my capital account, it's no longer the $50,000 here. Now that's already been put in here, it's been changed and molded, and now my new ending balance for my capital account is $50,697. So I go over to my balance sheet, and as you can see, everything on the top part of my worksheet, all this stuff on above ends up being put into my balance sheet. I'm trying to center this here so everyone can see. So you can see we have cash and cash, accounts receivable, office supplies, prepaid insurance, computer equipment, accumulated depreciation, and here it is. $27,000, $17.50, $600, $22.67. Now the computer equipment and accumulated depreciation, these are the ones right here on my worksheet. I'm actually on report format going to indent these because this is a sub-calculation and my final calculation goes over here. So I start with my sub-calculation, taking the total dollar amount of my computer equipment minus any accumulated depreciation, and I'll take the difference between that, and this is my book value of my computer equipment at $19,500. Then I total my assets, so it's all this column right here is totaled up. My sales, my liabilities, which is salaries payable, that's this right here. So I have a $420 amount for salaries payable, and I don't have any more liabilities. If I had more than one, they'd all be listed over here, and then I total them over here. I don't, so I just go ahead and do the $1 amount. Then here comes capital, $50,697. Oh, Jiminy Christmas, where did that come from? Well, check it out. Remember I told you this is my new ending capital balance right here, $50,697. It just simply gets transferred over here to the equity section of my balance sheet as being my new capital balance. And there it is right there, $50,697, which came from right over here. So literally my net income feeds into my statement of owner's equity. My ending balance from my statement of owner's equity feeds right into the balance sheet right there. Then I total up my liabilities and equity and I get $51,117, which is the same amount as my assets. And this fulfills the accounting equation, assets equals liability plus equity. There it is. There's my accounting equation. Assets equals liabilities plus equity. Here's assets. Here's liabilities and equity. Add it together, and they're equal to each other. That's my accounting equation. Thus the name is called balance sheet, because I want this side and this side to balance, just like I want this side and this side to balance. Okay? Excellent. Excellent.